Here we have the current stock market update for Taiwan Semiconductor Manufacturing Company, stock ticker TSM. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So we do have a fairly interesting stock to look at today. This is a very important company. This is essentially the big kahuna as far as the production of CPUs globally. This is the major foundry that is in existence globally, and they did release earnings last week, which is why we're starting to see this price gap movement that is developing for this stock. So I was doing some other work for this stock, so there is going to be a little bit more fundamental analysis in this video. We will be looking at some of the other factors that went into the earnings report, and we will be looking to explain why the share price action here is gapping in this way, and why we are starting to see this move to all-time highs. So, as we can see here quickly, this was the earnings reaction, and then we also see that there is a major spike in trading volumes that have been associated with this stock. So here we have some of the earnings figures that were released last week. This is the fiscal third quarter period, and what we're looking at here is some fairly substantial movements in both earnings and revenue growth. So the EPS figure, earnings per share, did see annualized gains of more than 54%, which is substantial for a company that's this large. And then the revenue figure was also showing lots of growth here with 36% gains here. So that would be these two figures here. So this is a lot of growth, and this does suggest that the smartphone business is starting to make a bit of a recovery. That was slowing down a bit in the sort of post-pandemic period, but that is starting to recover. We are starting to see more demand for smartphones, and definitely the artificial intelligence aspect of these advanced processors does continue to run strong. There is criticism about whether or not all this artificial intelligence spending is actually producing a return on equity and things like that. Could this actually lead to some declines in artificial intelligence spending? But these figures currently, I think that what they show here is that that's not really the case. There's still plenty of artificial intelligence spending, which in my opinion is a good thing. Artificial intelligence is the next evolution of the species. It will replace us, and I actually think that's a good thing, believe it or not. I think we should be replaced. So some of the figures that do stand out to me here are the gross margin figures. These are fairly substantial numbers. They're not NVIDIA type strong, but gross margins are coming in at 57.8, which is incredibly strong. I mean, not everybody can be NVIDIA. NVIDIA has numbers that are north of 70%. But these are still very strong numbers. Operating margins, 47.5%. Net profit margin, 42.8%. So, if you compare this to a company like Super Microcomputer, for example, a lot of attention is being placed on the accounting manipulation story with that stock, the possible Department of Justice investigation and things like that. But the real story, in my opinion, I mean, the underlying problem, if there are problems with Supermicro, would be the margin figures for that company. They do come in closer, in the teens or sort of 11% type of area. And as we can see here, TSMC is far outperforming those numbers. So this is a lot of strength here, and it is a lot of growth on an annualized basis. Here's just a quick look at some of the different revenues that have been produced by technology segment. The smaller nanometer chips tend to be the more advanced chips, and a lot of the revenue growth that was seen during this most recent reporting period was found in the 5 nanometer and 3 nanometer chips. So essentially what that tells us is that the more advanced chips are still performing quite well. That would be sort of these two areas here. In the chart, this red area and the green area. So these are still substantial portions. I mean, we're talking about more than half of the revenue here. So what this tells me is that there is still a lot of money that's going into artificial intelligence at the moment. Here we just have some quick sort of comparative valuations here if we're looking at the forward PE ratio for Taiwan Semi and then some of its competitors. So for example, if we compare this company to Intel at the moment, Intel is trading with a forward PE above 88, which is extremely high. AMD is lower at 48 at 46 times forward earnings. but it's still much higher than Taiwan Semi. The only real exception here is Qualcomm, which is an incredibly cheap company, and I do think that that's an undervalued company, which is currently trading at 15 times forward earnings. Here's just a little bit of a different metric. We're looking at the forward price to sales ratio. And again, Taiwan Semi is sort of trading at the upper end of that range. So 11.7 roughly times forward sales. Qualcomm comes in much lower again at 4.5. AMD is a little bit closer to Taiwan Semi at 9.8, 9.9. And then Intel is trading much lower at the moment at 1.86 times forward sales. In relation to the book value, Taiwan Semi, in this case, is the most expensive company in this group. This is a bit of a volatile metric, as you can see. There have been some spikes with AMD in particular and also Qualcomm. But if we look at the current figures that have started to stabilize a bit more, we can see that currently Taiwan Semi is still the most expensive stock in this group at 8.2 times book value. Qualcomm is pretty expensive in this using this metric at 7.7, AMD at 4.5 roughly, and then Intel at the moment is currently trading below book value, roughly 85% of book value. So in terms of what we're seeing here in the price chart, this movement to the top side recently has been significant because we have now broken through resistance levels that were coming in at 193. At the very least, if anybody was looking to trade this stock, I would be looking for a bounce here from that area at minimum. I would probably be looking for something a bit lower than there as well. So if we just sort of do a quick Fibonacci study here, we can see that looking at these numbers, we can see that the 38.2% retracement does come in a bit above that prior resistance level at 196.50 roughly. But then the 618 is found at 186.60. So this is looking like a bit more of a preferable level. So if I personally was going to be scaling into this trade, what I would be doing, I'd look for something more around 195. I would be looking for a bit more of a pullback into roughly 195. I would allow most of this share price gap here to fill itself, then possibly gain some support off of that 193 area, possibly buy in right around 195. But then, the entire gap really does extend much further, and it does come closer to the 618 retracement at 186. So, I would possibly look to buy into the stock a little bit at 195, and then possibly a bit more coming in right around 187.90. So that would be my sort of second scale in area here. I mean, this is a very well positioned company. I mean, we are seeing a bounce up and a gap upward here for a reason. These are strong results, but for the most part, it's starting to get a bit expensive at the moment compared to some of the other companies that are in the same peer group. And I would probably, at the very least, I would be waiting for a movement back into roughly 195, and then probably scale in again at roughly 187.90. And then you can probably stop out of the position somewhere around 184.80, somewhere around there, because then that would start to, at that point, we would start to lose some more of the exponential moving average support zone. So here's the current market update for Taiwan Semiconductor Manufacturing Company, stock ticker TSM. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.